All right, this is Ubaid on behalf of Electronics, and in this video, we're going to be talking about internal and external stakeholders. Now, when it comes to your internal and external stakeholders, okay, you have internal stakeholders like your shareholders, your managers, your owners, your employees. Okay, your external stakeholders on the other side include consumers, okay, external parties, okay, those who have a concern as to whether the business succeeds or fails. Okay, now the reason why you have internal stakeholders, the reason why the employees are concerned um, in regards to the success or failure of a business is because obviously employees do get paid wages and it's possible to get a promotion or get commissions if they do well and if the business does well. As a result of which they're concerned in regards to the success or failure of a business. Apart from the employees, you also have your managers who are responsible for managing the company. Okay, yeah, and their wages may depend on the success or failure of the company itself. As a matter of fact, their position may be at stake when it comes to the success or failure of a company, because it really depends on how well they manage the company. If they do manage the company well, okay, then obviously they get to keep their position. If not, it's possible somebody else might take their position. Okay, apart from management, you also have shareholders, okay, and their return on their investment is based on the success or failure of the company. Okay, so you have shareholders, okay, and obviously you have the owners of the company. So owners um, can only run their business as long as they're making profit, which means if their operating expenses are too high, or if their cost of goods sold is too high, then it's possible they may not be able to make enough profit to reinvest in the business and scale the business. Okay, so as a result of which, it's obviously important for these internal stakeholders, okay, to understand and to know whether the business will succeed or fail. Apart from your internal stakeholders, you also have your external stakeholders. And when it comes to external stakeholders, you have customers. Okay, the reason why customers are concerned about the success or failure of the company is because obviously um, customers go after reputation of companies when they buy the product. Okay, and if the reputation of the company isn't that great, it's possible that the product might not turn out to be great. As a result of which, the customer may have a need to return the product in the long run. Now, to avoid all the hassles of returning the product, getting a refund, or getting the product replaced, or ending up with a product they don't want, okay, obviously they need to do a little bit of research as to whether the company is succeeding in the market or if it's failing in the market. And this is the reason why they're interested in the success or failure of that business. Next, you have creditors. Obviously, creditors do give out loans, okay, to small businesses as well as corporations, likewise. Okay, as a result of which, okay, they're interested in the success or failure of the company because obviously, if they give out loans and if the company is not making enough profit, then the company might go bankrupt and they might not be able to receive their money after all. Okay, especially if that money is not insured. Now, apart from creditors, you also have suppliers. Okay, suppliers are people who supply the business with goods and services. Now, when it comes to suppliers, this could be a wholesaler, this could be a manufacturer, okay, this could be a retailer. So obviously, they're concerned with the success or failure of a company. Okay, a manufacturer. Excuse me. A manufacturer may be concerned with the success or failure of a company because a manufacturer um, has a stable clientele, and obviously, if the company does not do that well, it's possible the company may not be able to buy this product from this manufacturer in the long run. Okay, so that disrupts their entire supply chain. You also have your retailer who may be supplying to a service-based business, such as a tradesperson, a plumber, an electrician, for example, and so on and so forth. So if the tradespeople or the tradesperson is not doing that great, if the service-based business is not doing that great, then obviously it will impact their sales. Okay, and they have to keep this in mind. Their marketing team has to keep this in mind and anticipate sales in the long run so that they can figure out as to what they need to invest in and how they need to take their business from there on. Okay, now apart from that, you also have the government and the society. The government obviously um, collects taxes from businesses when it comes to sales tax, for example. And this is the tax revenue that the government uses to invest in public infrastructure. Okay, now apart from that, you have society. Obviously, society uh, deals with things like pollution. Okay, society deals with things like um, air and water pollution. So obviously, if the business is not doing that great, is polluting the environment, it's possible that the society might be concerned, okay, as to um, okay, what needs to be done with that business. Okay. Now, apart from that, the society may also be concerned in terms of employment. Okay, if the business is employing more individuals, then obviously the society will be concerned as to whether the business will succeed or fail in the future. All right. Now, apart from that, okay, when it comes to internal marketing may involve some kind of promotion of the objective product or service. Okay, so say for example you walk into a hair salon. All right, now in that hair salon, if the person, the hairstylist, for example, gives you a great customer service and does everything right, then it's an indirect promotion of the business. Okay, he or she indirectly promotes and markets the business. And this is your internal marketing. This is promoting the objective product and services of a company to its internal constituents. Okay, um, and this is something that employees have to keep in mind, and employers do keep in mind for them to reduce their operating expenses when it comes to marketing. Because if they can do their marketing through their employees, through word of mouth, then it's way easier for them to reduce their operating expenses and get a higher net profit for them to reinvest in the business. All right, so that would be it when it comes to internal and external stakeholders. So on behalf of Electronics, this is Ubaid. Have yourself a great day.